Welcome back. Hope you're having a fantastic day. Markets have been up and down today. So let's take a look at what is going on with the stock markets first and foremost. Markets started down pretty much almost 1% across the board, have rebounded here, have about 50 minutes left until the close. So again, the investor sentiment is measured by the momentum into the close. So we'll see how the markets settle out. Might finish flat or a little down for the day. We have earnings coming out this week, big week of earnings to keep an eye on that can really affect markets. But the really big thing is the markets are not going to bottom until we get a better handle on just how aggressive the Fed is going to be. So all eyes are still on the Fed because now they've come out and said, we have got to get a hold of inflation. They know they've lost credibility on inflation and they have to really get inflation under control and start to get a grip on that, and what's going to carry the markets right now is probably tech, Microsoft, other tech shares rebound based on earnings. Twitter's up because Elon Musk is looking to buy Twitter. But at the end of the day, investors and the markets are looking to the Fed. How are they going to reduce the balance sheet? How much, how fast? What is the actual interest rate hike going to look like? And what is the real action that they're going to take at the meeting in May? So the markets are trying to trim a little fat in anticipation of a very aggressive Fed and a resolve by the Fed to contain inflations, to be serious about inflation, and to regain their credibility because they have lost credibility, meaning the markets do not believe that they have the ability to control inflation and or land this softly, meaning the quantitative tightening and raising the interest rates without breaking something in the markets, either the bond market, the stock market. This is Bitcoin right here. Over the weekend, had a low wick down to about 38.2 between the weekend, and I think that might have been earlier today. And then markets rebounded a little, or Bitcoin rebounded a little bit to the 40,300 mark, playing with this major trend line that we've been following. And of course, all of the other altcoins and assets are kind of following through. But let's take a look at Bitcoin in the stock market because this is the major trend that Bitcoin is following. It did close below the trend line that we've been watching for 2 days. So the question is it going to close below that trend line today? Is this trend line going to become resistance that has been support? And if that's the case, then what we've been looking at is if this becomes resistance and price gets rejected and continues downward until we find a bottom, at least a local bottom in terms of where the market is heading. But let's take a look at this. So there's a lot of talk about 2017, 2018. And if we go to Bitcoin specifically, the last time the Fed actually raised interest rates was 2018, December of 2018. And we'll look at the traditional markets in a minute. As we know, Bitcoin and crypto are risk assets. They're going to track with the markets right now because risk capital is in them. And that was when the Fed actually raised rates was December of 2018. And that was the bottom after the 2017, 2018 bull market boom. And you will see with traditional markets that they started tapering ahead of the Fed announcement, kind of like what we're experiencing right now. Markets peaked. They've been selling off in anticipation of the Fed taking action to raise rates and reduce the balance sheet. In this case, all they were going to do was just raise rates. They weren't even reducing the balance sheet, I don't think, at that point. Maybe they were, and they reenacted the program, reverse courses, and then bam, off to the races we went. A little bit of staggering here and there. That was the March pandemic. I think after that, when the Fed reversed course, we were really off to the races here, but then the pandemic talk came in, and that's kind of what stifled markets for a little bit until the Fed jumped back in, and then off to the races. Obviously, the rest is history now between the two peaks that we reached, Bitcoin reached and the markets reached during that time frame. But let's look at traditional markets because this is where we're at now. Fed begins talking about having to do something about inflation. Inflation's not transitory. We're going to have to reduce the balance sheet, raise interest rates. So the markets start correcting in anticipation of that, a little bit of a bounce, and then working its way back down into the actual move. That's going to be in May, second week of May. So in the next couple of weeks, we're going to see what the real effects of that are going to look like. And here's where it played out. The last time, December 2018, was the bottom after the Fed raised rates, just like in Bitcoin. This is where the talk started, was in that January, February timeframe. Markets dropped a little bit, kind of rebounded. This is the Dow, and then ultimately fell off and capitulated on the 2018 rate hike. The Fed was immediately reversed course. Markets rebounded. Coronavirus dump. Fed jumps in, off to the races. NASDAQ, same thing. This is your 2018 bottom right here in December. After the Fed talking about it, did it, markets dropped. And just to put this in perspective, we'll look at Bitcoin. You know, this was a 23% drop for markets from the peak at that point. And right now, we're not close to that yet. We're only down, well, we're getting close. I guess we're down about, we're getting real close. The markets are down almost about 23%. So this is the NASDAQ. And if you look at right now, markets are down about 20%. So that's bear market territory. Another 3% would be 12,800 on the NASDAQ. And then of course the S&P, same story. This is the Fed talk here, runs up, dumps on the Fed action of rate hike. Again, that was a 20% drop. Let's see where the S&P stands today. S&P was down 12%. So S&P still has a little runway. Dow Jones, probably the same thing. Dow Jones dropped, I think it was 20%. Generally, that's what happens when the Fed starts raising rates. It was 20% across the board in all of the assets, except NASDAQ took the biggest hit. Dow's down about 9%. So the Dow and the S&P have the furthest to go, which reverts them back to where they were before the coronavirus dump. That's where it puts the Dow, the S&P with a 20% drop. Let's see where that puts it. Not quite that far back, but around this point here, January, February of 2021, all the way back to coronavirus would be a 30% drop before the coronavirus pandemic. And then Bitcoin, we don't want to look at Bitcoin because Bitcoin dropped the most during that time frame. It was around 50% from the peak. And well, right now, 50%, that's not too bad. 50% is right in that $34,000, $35,000 price point, which is where I called the bottom a few months back. And on a closing basis, I use closing timelines, not wicks, for all of my trend lines and just closing basis. So that's back where I called the bottom a few months ago, made the video about the 35K bottom. People said I was crazy, can't call bottoms. It's held up so far. The question is, if this trend line breaks and we close below it and continue down, will that hold off in a major market sell-off if the markets continue to sell off another 10%? Will it hold off if war escalates in Ukraine, things like that? So we won't know till we get there. So we'll just have to wait and see how it all plays out. And again, the key is watching the momentum of the markets into the close as the markets continue to unwind and reprice ahead of the Fed board meeting. Powell came out the other day and said 0.5 rate hike, QT beginning, in other words, selling, unloading the balance sheet. Bullard came out and said he wants to see 0.75. He's always the most aggressive. So we'll have to see what they actually do, the guidance they give moving forward, what their balance sheet reduction is going to look like. Based on that information, if they just do a 0.5 point rate hike and say we're going to start balance sheet reduction Q3, Q4, whatever, then markets will rally. We'll get a nice little bounce because they are pricing in that action. And all things being equal, might have a little bounce tomorrow. So we'll just have to see how things play out into the close, what kind of news surfaces. And as we get closer and closer to the actual event, we will know what's going to happen. So those are the things I'm looking at today. I'll see you in the next video.